Here we have a question that asks us to find missing values in financial statements using knowledge of the statements and the accounts they reflect. In this question, it will be important to remember the accounting equation, as well as what information applies to which financial statements and how they relate to one another. Remember that each statement has information that shows up on another financial statement. Net income from the income statement shows up on the statement of retained earnings, and the ending balance from the statement of retained earnings shows up on the balance sheet. We will want to first look at the statement of retained earnings, since the value of C will be the first step in calculating the rest of the missing amounts. We see that at the end of the year, the balance in the retained earnings account is at $7,800. This is up from the beginning balance of $7,100, which means the company has made a profit. However, we also notice that dividends of $1,000 were paid during the year. It should be clear that without the dividends, the ending amount in the statement of retained earnings would be higher. So we add the $1,000 in dividends to the ending balance of $7,800, which leaves us with $8,800. This is how much the balance would have been had the $1,000 not been paid during the year. We then subtract the beginning balance of $7,100 from $8,800, which gives us net income of $1,700. Next, you'll notice that B in the income statement is also net income, meaning they are one and the same. So we can plug the same number, $1,700, into the income statement for letter B. Revenue minus expense equals net income. Thus, we can subtract the net income of $1,700 from revenues of $5,000, and we will be left with expenses of $3,300. Also, it's helpful to keep in mind what each of these values represent. Revenues are the total amounts earned by the company from operations, expenses are the amounts spent in running the business, and net income is the difference between the two. Now we only have the balance sheet values left. Retained earnings will be the same as the ending balance from the statement of retained earnings of $7,800. Common stock and retained earnings are stockholders' equity accounts. By adding $4,500 of total liabilities, $2,000 of common stock, and $7,800 of retained earnings, total liabilities and stockholders' equity is $14,300. We will finally use the accounting equation to determine total assets. At any point in time, total assets must equal total liabilities plus stockholders' equity. This is called the accounting equation. Thus, the company's total assets will equal $14,300.